Today, low interest rates are changing the purchasing patterns for many retirees. CDs, bonds, and money markets no longer have the power that they once had. Here to talk about some alternatives is John Kelly of Chicago, Illinois. John, welcome back.
Thanks for having me, Scott.
So let's start with how we got here.
Well, a lot of it has to do with interest rates and the Federal Reserve lowering the rates. They basically did this for a couple of reasons: to stir the economy, to give businesses more borrowing power, to either purchase goods or to hire more people. It's also great for younger people who are buying homes and consumer goods today, like cars.
So for CD holders, how does this affect them?
It's got a devastating effect on their income, Scott. Years ago, a lot of my clients now have CDs that are maturing that were paying 5%. So if a client had $200,000 in a CD, they'd be getting $10,000 a year in income. The current average CD rate for 5 years right now is a little over 1.5%. So you're talking about $3,000 a year in income versus 10. It has a devastating effect on their spending power. Their needs are still the same, so now they have to dip into principal.
Can you expand a little bit on bonds and money markets?
Money markets today are pretty much non-existent. They don't pay hardly anything. Bonds, a lot of people are still in bonds. And the problem with the bond market is when the interest rates eventually start to rise, it's going to have a devastating effect on the bond prices. So when the interest rates rise, their bond prices are going to go down, and they will lose a lot of market value due to that.
Is this why some people are turning to gold and dividend-bearing stocks now?
Yes, Scott. I feel today that everybody is looking for alternatives to get higher returns on their money. Gold is at an all-time high, which can be very bad. Buying something at an all-time high, I don't think anybody really would like to do that. The problem with stocks and a lot of dividend-paying stocks today is you actually never own the stock and the gain at the same time. You have to physically sell the stock. If you buy a stock at $10 and it goes to $40, you actually physically have to sell the position to realize your gain. That's why we like using fixed index annuities as other alternatives, because they actually allow you to capture your gains each and every year and still maintain the product.
Annuities are certainly gaining popularity right now. What makes annuities the ideal alternative?
Well, annuities are a very good thing today, especially for the retirement group, because it's a great way for wealth transfer, to transfer wealth to their children. Everybody's got different needs and goals. A lot of our clients are looking for income. A lot of clients are looking for safety of principal. And one of the main features today with the society today, especially with the baby boomers retiring, is having an income that they cannot outlive.
Great information, John. Thanks for joining us.
Thanks for having me, Scott.
My guest has been John Kelly in Chicago, Illinois, and you're watching Annuity News Now.